In this video, I'm going to show you exactly how I use risk management while trading supply and demand or other strategies to maintain profitability. So I'm just going to run through a few setups, and the key component here to using risk management while trading your strategy is that not every setup is the same. Certain setups are better than others, so you have to have a grading system on this, and you need to be able to recognize the grade of the setup so you can adjust the risk per setup. So let's just get straight to it. Now we're on Russell here. So this is supply and demand, my main strategy. I believe these are all supply and demand except for my last example. My last example is a breakout, and breakout is, it's not my favorite thing to trade. Supply and demand is definitely my best strategy, but breakouts still work out 100%. And there are different grades of breakouts as well. So you need to figure out how you can grade these setups depending on your strategy. But starting off, we're on Russell here, and I already put this video up. I think I covered this setup twice already on my YouTube, but we're just going to run through these setups and show you how I grade these. So first off, looking at price action here, we're clearly ranging. Now we were stuck between this area and this area, and then we got a break of structure. So we're in a range, and then we broke these highs. Previous highs are here, so we have to break a structure. So that's our first confluence with this trade. Now we also have aggressive buying from the zone, which is beautiful. So we're looking for a retracement into the zone down here, demand zone, high probability demand zone with a gap, and we're looking to take buys up to the highs, or just a 1-to-1. It's just some quick profits because this is not that quality of a setup. So if I were to grade this, my opinion, this would be like a B- or like a C+. The setup's not that good, but this is worth taking a chance on. This is definitely worth not passing up. So looking at the setup, we already know EMAs are in the middle. EMAs are irrelevant here because it's just chopped. You already can see it's choppy. It's not that good. Not that clear of a trend here. And supply and demand is a trending strategy. Now, say we're on a downtrend from London and we're starting to break highs. These are just waves. These are just waves in the market. So downtrend, and then we're getting a New York reversal, which is a common pattern from London switching to New York session. So downtrend, stop making lows. I even put a double bottom here, key indication of a reversal. And then we get our first break of structure, okay? Then we get a second break of structure. We're breaking highs, previous highs, not making lower lows. So the key thing with supply and demand is you want to get in on these waves. These are just waves. If you want to surf a wave, you want to get in at the earliest point, at the point where there is the most momentum. So it's the same concept here. Now, if I can pull up a setup, I'll pull it up on the last one, but this is simple stuff, especially if you are trading an uptrend, same as that concept. So let's see, you can go to the chart here. Now, this one's not a good example. Say this one's a good example. So we have a 5-minute supply here. Now the key thing here is a break of structure. Line chart, we broke the previous low. We have a fresh break of structure indicating price is ready to continue downward. EMAs are also somewhat in your favor, but not the best, not the cleanest setup. But the key thing here is, let's follow the price action here. We even have a double top, come down, break structure, retrace, and go back down. Simple as that. Simple as that. All we're doing is reading price action. EMAs aren't everything. Price action is everything. Market structure is everything. The fresh break of structure is the key component here. So we have a double top. Now our supply is near here. So we're just looking for a tap into the zone, take your sells, and take it downward. So pretty simple. We're just riding the waves. This is a very simple concept. Now back to the setup. C+ setup rather than B, I would say, because of the consolidation prior to this setup forming. So We fast forward, go to 1 minute intervals. We now tap the zone. So now I'm ready for a break of the candle, stop loss below the lowest area in the zone, and let's take buys. There you go. There's your buy. It broke the previous high of the last candle. Now I'm damn near showing this strategy for free. So like and subscribe to the channel. But pretty simple. This is very simple concept. Take 2 buys. I took 2 buys on this, and this setup I got, this was Wednesday, May 14th. So yeah, this setup I took 2 buys, 2 contracts on Russell, which I'll put up the screenshot on the screen, and I made it was like $280 around that. So simple as this. Set up your little long position. Take buys at the break of the candle. Stop loss below the lowest low in the zone, or the lowest low after the break of the candle. And TP 1-to-1. And we can go for a little bit more near the highs. So if we just fast forward, deep drawdown, it's okay. You just gotta wait. This is the reality of trading. That's where psychology comes in. You just chill and just wait. Just wait for it to play out. There you go. $280. Pretty simple. Simple setup. C+, not the best. And you can see, even after fast forwarding, clearly a range. We're not trending. This is not the best setup, which is why I'd say C minus or C+. Maybe a B minus, but it's not that good, so I would say C+. Now, this setup, once again, within a range. See right here, we broke above, but it's not clear yet. EMAs are still choppy. We were within a little bit of a range. Then we had 6:30 news maybe, and then stock exchange open. Nothing's clear here. We need a trend for supply and demand. That is when supply and demand is the best setup, or the best strategy to trade. So we fast forward here. Once again, we broke structure. Key component here, break of structure. We broke all the lows previously with this push down. So now we have a high probability supply and demand. We have a gap right here. So once again, break structure, come back to the zone, and let's take it down. Simple as that. So let's fast forward. Let's get ready to put our long position on. Now we're looking pretty good right now. This is not the best because once again, we have consolidation before the start of the trend. And yet again, it's not that clear. It's not that clear whether or not we will be trending on this. So the last setup, I made $280. This setup, I also made $280 because of the fact that these setups are, now this one I would say maybe C+, B minus. The other one, I said C+ for the other one, so this one's a little bit better. I like this one a little bit more because it's more clear, but it's still not trending. It's not what you want to see trading supply and demand, but this is still a valid setup. So this one I would probably go to B minus or also a C+. It's just a little bit better than the last one, somewhat. I just like how we broke the lowest low and we're not coming up too high to take the sell. We're just breaking real quick and then coming back and then take a sell right again. This one, we replay it back. We broke up all the way up here, broke these previous highs, aggressive buying, came back to the zone. Now we had aggressive selling into the zone and we had to go really far down to get into the demand zone. So in comparison to this one's much more cleaner, faster, and simpler. So if we fast forward a little bit, just waiting for my break of the candle here. Stop loss, same spot. Should be this one that we get break of the candle. There you go. Now we're putting on 2 sells. Stop loss above the highest high previously. $280 right here. Fast forward. There you go. Easy 1-to-1. $370 risk, we're already at $400 profit. And my entry was lower than what it should have been. My entry would be right here at the break of the previous low of the candle. So there you go. Once again, simple supply setup. Break a structure, retracement, tap the zone, we wick the zone, wick the 13 EMA. EMAs are in line at this point now. So this setup is actually like I would put it B- rather than C+. The other one I'd put C+. This one's definitely B- after looking at it. So clean setup. And we're not trending, so what do we get? We get a pullback. We get a reversal right after. So it's clear that if you're gonna take setups like these, you gotta be quick on your toes, take a 1-to-1 and leave it at that. That's what it is. You can't catch crazy runners on these setups that are just coming out of the blue. Like we have consolidation, break a structure, supply or demand, tap the zone, and then we take the setup. You're not likely to get a runner, so I would take your 1-to-1 rather than leaving on a contract as a runner that will get taken out at break even once it reverses. Now this one, a little bit better, not the best, but the problem here is we did not get a tap on the 5-minute zone. So as we fast forward, now I look at the 5-minute, 15-minute, 1 hour, and 4 hour. Higher time frame for direction or higher time frame confluence with supply and demand zones. And then also look at 15-minute supply and demand plus 5-minute supply and demand. If you get a 15-minute zone with a 5-minute zone in it and they both tap, great confluence. You have multiple time frames in line with the setup you were trying to take. So looking here, we clearly have the 5-minute supply, fresh break of structure, we're looking for retracement into the zone, and we're going to take sales just like I did before, stop loss at the highest high because we're taking sales. And here, this one's a little bit better, so you can go for a little bit more than a 1-to-1, but I would take some off at 1-to-1, leave runner at break even. You gotta put your runner at break even, that way you got profits and there's no more risk on the table. Key component to leaving a runner or twin trading. So 15-minute zone. Now if we mark up this 15-minute supply right here, once again we have previous break of structure. We broke structure on these lows. You can see right here, this low broke all these lows, and then we chopped a little bit and we broke the previous low once again. So we're looking pretty bearish. Now we have the 15-minute and the 5-minute zone. Also, we have tons of gaps below. We have all these gaps right here to fill. So that's a good confluence for taking the setup. Now, if we fast forward the setup, I took a breakout here, 5-minute breakout mixed with a 15-minute supply. So it's good to be versatile with this because had I waited for the 5-minute supply, would have missed the setup. Never tapped the zone, only tapped the 15-minute. So you got to take what you get and be versatile with how you can take these trades. So I'm looking for a break of the 13 EMA. 13 EMA is the blue squiggly line. So let's just fast forward this a little bit. Okay, we're looking good right now. We're already pushing through it. Now we wicked. That's a horrible bullish candle, even though it's red. That was a very bullish reaction from the 13 EMA. And May 22nd, if I look here, May 22nd, I did $340 on this setup because this setup is a little bit better than the other ones. So I put on a little bit more risk. Now fast forward here, there's no entry yet. There's no entry. We can already take off the 5-minute zone. It's not going to tap. We already know that. So fast forward a little bit. Now I need some bearish momentum to come in. Okay, there we go. Now, okay, that was the close of the candle. So my entry was right there for the breakout. Stop loss would be the previous high of the previous candle that gave us the breakout that broke through the 13 EMA. You can even put it above here to be a little bit safer, but according to the strategy, previous high of the candle. Now that's it. Now we just wait. There you go. There's your 1-to-1. Put it on entry, stop loss right here. we are at a 1 to 1.2. Simple setup. It's the same thing over and over. We're just going to break structure, retrace, tap the zone, and take sales. Now this one wasn't even supply and demand. It was 15-minute supply and demand, but I like the 5-minute supply and demand 100%. I rarely will take a 15-minute zone with a 5-minute breakout. But simple setup, B-, and then we just chopped near the lows. Yeah, volume died down. It was the end of New York session. Now we can go to this setup. This setup was definitely a much better setup. So looking at my P&L here, this setup I did, so I closed one contract at 1 to 1, which gave me $85, and then my second runner gave me $270. So if I would have let this run, then I would have made around like $520 on this setup. But the problem here is it's not that clear. It's not clear that we're going to get the momentum we got out of this area. So it is what it is. You gotta be content. I made money on it, so that's perfectly fine. Just gotta improvise and look at these setups and look at what you could have done better. So problem here, there's a demand right here. No gap. There's no gap attached to the demand. The red candle is the demand zone, and the next candle made a huge wick, covered any gap that would have been there, and even the candle after didn't let it form a gap. So there is no supply and demand here to take. Can we go to the 15-minute? And there's another 15-minute demand with no gap. There has to be a gap connected to the demand zone. That's a key component to trading a high probability supply and demand zone versus a low probability demand zone. Now, you might have a different understanding of it, but this is my understanding according to my strategy. So these are my rules, and I gotta stick to my rules because my rules are what is making me profitable mixed with risk management. So following market structure, pretty clear here, we're bullish. It's pretty obvious. Consolidation, break previous highs, and we're just going up. So now that we have this right here, our buying zone is somewhere in here, somewhere in this zone. We need a retracement because we had a previous break of structure. So now we're just looking for that. Simple as that. Simple as that. You're just gonna ride the wave. It's just waves. It's simple. Don't make this too complicated. This isn't, inverse fair value gap, SMT concept. Or we do use smart money concepts, but not SMT divergence, like ICT stuff. I don't knock any strategies, but ICT is very complicated in comparison to how we trade, how I trade. This stuff is very simple. I can just look at a chart, take off EMAs, and I can see these setups with ease because of experience. So this setup, I would give a B, almost a B+. If it had a demand zone, B+. But this setup, I would give it a B, maybe a B+, but I already know the outcome, so it's kind of already hindsight for me to grade it because this is completely unexpected what happened with this setup. But either way, still a quality setup, still something I would take, especially if you want to get a little bit deeper into market structure. We're breaking highs, okay? Now we made a low right here, made a lower high, we made a lower low, and then we made another break of structure. This low right here broke the previous low, grabbing liquidity. Key thing here. Now there's liquidity everywhere. However, I used to base liquidity off of major highs, major lows, but there is also liquidity all over the chart, so you can use it as confluence. So these wicks right here swept liquidity from this previous low. We didn't even close below the low. Well, we did break the low, but we didn't close below the wicks. We just wicked down and rejected, especially the 50 SMA, key indication of support. and then made another breakout structure. 3-step confluence. Liquidity grab, breakout structure, supply and demand or buying zone, and then we go back up. Liquidity grab, breakout structure, come back to buying zone, and then take the buys. Simple setup. Now, if this setup, if price was up more and we broke the highs over here and had a demand zone, A plus, A setup, especially mixed with a 15-minute demand zone, A plus. I'm not gonna full port, but I'm gonna do a higher risk. I don't full port or do anything crazy. You got to be smart with your risk management, especially trading pot firms, because you paid for the account, so you need to be able to maximize your profits and get as much money as you can from these pot firms. That's what I keep advocating, because if you just buy a few accounts, never blow them, keep consistently paying yourself, the investment versus the return is, you're going to be multiplying your investment 100%. I already did it in real time. You can check out my other videos. I already showed how I do this, and it's very simple, showing complete transparency how I do this for free, which is why you should subscribe once again and like the video. So, following price action, clearly bullish. We had a liquidity grab, breakout structure. Now we're looking for a retracement into the demand zone. So this was a breakout because we do not have a demand zone to take buys off of. So I'm looking for price to just break the 13 EMA. Let's break down a little bit, get a retracement just like that, and then we're going to take buys. So now that we tap the 50 SMA and we're rejecting it, I'm going to look for some sort of bullish price action to come in, break above the 13, and as soon as that candle closes above the 13, I'm taking buys. Okay, we're gonna got a nice little doji, another sign of indecision or a rejection from the downside and upside, so we're waiting still. And we're almost there to entry. Not quite yet. That candle didn't do it, did not break the 13 EMA, we're just rejecting it. There you go. There's your break. Now I'm waiting for the candle to close. I need to see that price does want to stay above the 13 EMA. You cannot take this before the candle closes, because just like the other candles, looked like it was going to push up and then we wicked it, rejected it. So it wasn't clear that we're ready to push up. Fast forward a little bit. All right, candle closes right here. So I'm taking buys. Stop loss at the lowest low, or at the low of the candle that gave the breakout. You can even go, to be more safe, you can go underneath these wicks, or maybe like the 50 SMA, same thing, close enough. But according to my strategy, now this is only, what would this be? Like 1 or 2 points, 1.6 points, 16 ticks. So this is an aggressive stop loss. It's a short stop loss. So kind of got to be careful here, because you could lose before you win. But I mean, we want to just fast forward this. This was a beautiful setup. Beautiful, beautiful setup. I mean, I don't even have to say too much. You can just see aggressive, consecutive, bullish candles coming in. We even wicked up here, but you just gotta wait. You just gotta wait. I believe we hit 1-to-1 before we even broke the highs. So you literally hit 1-to-1. Take buys on this candle, 5 minutes, 10 minutes. It took you about 7-8 minutes to hit 1-to-1. 8 minutes to make what? $349. Is that this one? Yeah, $349. So come on, like simple stuff. Just fast forward this, and yeah, there you go. We even came up to these highs, rejected a little bit right before New York Stock Exchange opened, and I'm not sure how much more simple this can get. Just reading market structure and price action, analyzing, and using that to your advantage, mixed with EMAs. This one's beautiful because we have breaker structure, retracement, reject 50 SMA, breakthrough 13 EMA. So we have 250 and 13 EMA. This is a 50 SMA rather, but EMAs are in line here. So this is a quality setup. But yeah, that's pretty simple. This is just how I maintain my profitability by grading these setups and adjusting my risk per setup. Not every setup is the same, so you should do the same and have your own grading system and have an understanding of the quality of each setup and have a predetermined risk per setup.